Now, SAP reported a worse than expected fourth quarter performance, and to discuss that, we've got the company's co-CEO, that's Hagemann Snabe, who joins in with an exclusive chat all the way from Germany. Mr. Snabe, many thanks for taking time out for us. Congratulations on the set of earnings that your company has put out. Talk to us really about the main highlights for the quarter that's gone by.
It's been a very solid quarter again. We have now delivered the 13th consecutive quarter of double-digit growth. If you look at the highlights, we have 25% growth in software and cloud, which is, of course, winning market shares dramatically against competition who was negative. We have increased our operating income and margin, and we're seeing, in particular, the new strategic areas like HANA really taking off in a big way. So in many ways, this quarter shows how we are transforming the industry and taking the lead.
But whatever you say, this quarter seems to have been a lot more challenging for you folks than, say, the previous ones. What were the main challenges that SAP faced this time around?
Well, we actually feel good about where we are because the strategic areas that give us the long-term growth opportunities played out extremely well. I mentioned HANA, this innovation of a next-generation database invented by SAP, more than tripled in revenue this quarter, which means it's really becoming the innovation platform of choice for our customers. And also the cloud has a 380% growth for our business in this quarter. Again, a very important part of our long-term growth opportunity. We had one challenge in Asia Pacific, I think relevant also to India. The quarter was not as good as we had expected. It is good to say that it's due to short-term execution issues, but no fundamental changes to the market opportunity or our very strong role in this region.
What sort of picture are you painting for the quarters ahead? What's your guidance?
Yeah, we are reiterating our guidance for the full year. So it also shows you how confident we feel when most other IT companies are having challenges with the growth. We have guided and reiterated our guidance to a 14 to 20% growth in software and cloud, and 11 to 13% in software and software-related services. So we feel good about where we are. I think this quarter, more than any quarter, shows that the transition in the industry is happening.
The global slowdown is eating into technology spends. Earnings from various tech giants have pretty much shown that. What are your worries this time around?
If you look at our numbers this quarter, we are growing 15% in Europe, one of the most challenging marketplaces, and everyone else is having a strong negative growth, which shows that in the most mature market, we have a growth opportunity and customers prefer our solutions. And also in Americas, more than 50% growth from SAP. That's where the biggest market in our industry is, and there again we're winning market share. So we actually don't see a slowdown in the spend, but we see a shift in the spend away from expensive hardware and into innovative software. So in many ways, we take advantage of this shift.
Mr. Snabe, before we let you go, in the current volatile economic environment, what markets are you and your company looking to invest in?
Yeah, our biggest investment from a market point of view is going into the emerging markets. India is one of our key focus areas, not just as a market with a great customer base and opportunity to sell our solutions and create value, but also as a market of innovation, where we get fantastic talent to join SAP, and we have some of the most advanced partners globally in India. So we continue our investments, and we feel good about the opportunities to help transform those markets.
Co-CEO of SAP speaking exclusively to ET now. Many thanks for speaking with us, Mr. Snabe.